Good evening. This is Doc Severson for the TheoTrade report for Tuesday, October 10th. For the rest of this week, we have a couple of events to watch out for. First of all, tomorrow afternoon, we have the FOMC minutes. And then what we start kicking into as of Thursday is really the meat of the earnings for quarter three. So this is when most of the major banks are going to be starting to report quarter three earnings. So as we get into Thursday morning pre-market, we're going to be looking at like Citi, and we're going to be looking at JP Morgan. So JP Morgan down here as well. And that brings us to Friday. And Friday, we're going to be looking at Bank of America, and we're going to be looking at PNC as well as Wells Fargo. So that really kicks off really the beginning of earnings season for quarter three. Now, it used to be Alcoa, but Alcoa, since they've split, they've sort of abdicated that role of kicking off the earnings season. So it's really the major banks that were what really starts things off. And then, of course, next week it really heats up as we get into some really major days here of earnings, where we have like next Thursday. So next week, we have 131 companies reporting. Wednesday, we have 83 reporting. So this is where we start to really get into the meat of the earnings season starts next week. But the market right now is just kind of walking sideways, waiting for not only tomorrow's Fed minutes, but also the bank earnings. Now, when I look at the banks, let's just look at the XLF, which is the financials. So we look at the XLF and we start to see, especially as we look at the daily chart, we have already rallied some 10%. So just through the end of August into where we are today. So over the last 5-6 weeks, we already rallied 10%, which is similar to what the Russell has done during this time. So you have to wonder, with this level of exhaustion here and almost into weekly exhaustion as well too, even if they do report good numbers, how much of this is already priced into the cake at this point? Now, the answer to that depends on each chart, of course. So as we look at Wells Fargo has also come very strongly off the bottom here, come from a long way, but Wells Fargo has been sort of, under the gun lately in terms of the internal scandals that they've had. But overall, this is just a great big weekly bull flag. It's just a big weekly bull flag, and there's a fair amount of energy. In fact, there's a huge amount of energy here at the larger time frame. So actually, Wells Fargo looks well positioned to be able to handle good news. Now, as we look over to like a PNC is also come very strongly off of the bottom here. Although, because of the fact that it's been very choppy over the last 2 weeks, it has built up a lot of energy as well too. The only kind of wild card here is the monthly chart is in an exhaustion level off of the enormous move that we've had since the recent election, which seems recent, but it was actually 11 months ago. Next, we get to Citi. So Citigroup here is also at a daily exhaustion point. So this is where we don't expect a whole lot of movement from here. And this is also a very strong, very linear move off of a weekly flag. So it still has some energy left to go. So in this case, I would have to say that Citi may have a little bit of room to run to the upside, but not much. So we may see a very muted reaction from Citi, of course, depending on what news that they provide. And then finishing out the bunch here with JP Morgan. JP Morgan is also dealing with this exhaustion signal down here on the monthly chart, and has room to run from a monthly perspective and also from a daily perspective. So the move off of the bottom here since late August has been very modest for JP Morgan. So of the bunch here, I would say JP Morgan probably has, between JP Morgan and Wells Fargo, probably have the best potential to be able to bake in at least a little bit more good news without dropping from the reaction. Now, overall, just doing a reset on the S&P 500, this is doing exactly what it needs to be doing right now to work off this big move that we've seen from 2,500. So again, same things are going on here. The same things that we see all the time. From range contraction comes range expansion into this move at exhaustion. So what did we expect at this point? We expected range contraction. That's what we got until it built up enough energy to be able to rally again into exhaustion. And what are we expecting right now? We're expecting to see more of this range contraction. So perhaps based on what we see here on the S&P, a lot of these bank earnings are already baked into the pie. We'll see whether or not it stays within this range in the short term. Of course, the one X factor here is considering today's volatility. And we had a daily range today of about 11 points or so, and you can not even see the daily volatility now anymore. You cannot see the daily volatility anymore now at the top of this enormous rally. It's almost as if it doesn't exist. And so when we see that 3% day, which is going to come out of nowhere at some point here in the near future, I think it's going to shock a lot of people, because right now moves of 10, 11 points in the S&P, we're saying that's a big move. Don't think so. Don't think so. People are not prepared for what is going to come eventually. But one thing I will say is that for us to go higher, we have to go lower. I've been saying that now for some time. For us to go higher, we have to go lower first. One step back, two steps forward, one step back, two steps forward. The same thing happens to the downside. For us to go lower, we must go higher first. And that's exactly what's been going on lately. The first move will come as kind of a shot over the bow. That could kick off the volatility here, and it could come literally any day. So watch for the banks later on this week. Watch for Fed minutes tomorrow. We'll see whether or not these are events to trigger off any volatility. Otherwise, we will remain in this extremely low volatility market until something comes in from left field, which is not currently priced into the market. That is it for today's report. Thanks for listening, folks. We'll see you tomorrow.